Hi, Jennifer Warren here. And I want to do sort of a download from a conference I was just at, and it was a Federal Reserve Bank energy conference, and it represented Dallas and also Kansas City districts, which are the 10th and 11th district, and which also represent the majority of energy production in the United States. And this was the conference, and it was held on Friday. And so I just want to cover a little bit of my takeaways, and then I will drill into some deeper information that I learned. So on the sort of macro level, one takeaway is that, and this was from the president of the Kansas City Fed, Jeff Schmidt. He said that right now monetary policy is moderately restrictive, and he actually dissented about raising rates in the last time that the FOMC convened. Also notable was that, and this is something I had in an earlier video and some information on my website, is that IT growth was 1.1% of GDP growth in the first half of 2025. And just to note, the economist whose presentation I saw a while back was at this conference, and we discussed that 1.1%. Turns out that the majority of that spend, in fact, happened in the second quarter of 2025. There was this cooling in the first quarter, as we were just, getting into the new administration, and the economy was trying to figure out where things were going. So that was kind of notable. On the LNG and natural gas front, from Cheniere, they showed a chart about that from 2024 to 2030, there's going to be 6.9% of cumulative annual growth in LNG. And that starting in 2026 all the way to 2032, this is when the build out of the third wave of LNG happens. And after that, it kind of like grows really more slowly. Also, just to note, there was grid experts, and one of them mentioned that of 33 utilities, these are like top utilities and mostly publicly traded, they will be spending $1 trillion to 2029 in CapEx. So that is actually a lot of money, and it's mirroring this AI data center build out as well. There's a lot to that. And I'll go through and break out a few of these top CapEx spenders, if you will, in some charts, which I'll show in a little bit. And then the other notable idea, and this is something that was also, I was sort of circling this, and just that the energy picture really varies state by state. We hear a lot about, there's all this demand for data centers, there's all this demand for energy because of data centers, there's all this energy demand, period. But it's really in a sort of state by state, that's where the refinement is happening. And yes, in Virginia, there's a lot because of data center growth. Texas, there's a lot because of data center growth, but because of other types of growth. And I mention all this in a feature that I wrote, and I will talk about that in a bit too. But the Dean Foreman, who is the top economist of the Texas Oil and Gas Association, spoke. And just a couple of notable things he said. In Texas, there was $220 billion of energy exports, that there are 45 BCF per day of pipelines under construction, and that 22 of that is going to the Gulf Coast. Also, there is 6 million barrels per day of capacity growth in crude oil and liquids. So that is not oil and gas peaking. And that was sort of the other point made, was that even the IEA, the Paris-based energy watchdog, was saying that, we might peak in 2030, but we could grow till 2050. So that is very much the case now. So the narrative has changed quite a bit. And also, Foreman noted that, there's the basins are strong and growing in spite of this recent, oil price slide that we've seen, and that there's kind of an underestimation of shale growth, and that And part of that story is that there's been more productivity per well that's been happening. And I've been seeing that in the numbers. And that was really reflected in when I did a feature about Comstock as well, a natural gas producer. And but this productivity is not because of AI. This is happening because of traditional data analytics. And so that's also interesting. And now I'm going to go into a little bit more detail of some of the things that were said. So you have to bear with me as I sort of go through these notes, but it's the only way to do this. These are some notes that I took from the talk of President Schmidt from the Kansas City Fed. Again, that monetary policy is moderately restrictive, but markets are not acting like it's restrictive, which we have seen. We've seen a lot of announcements with, new debt issuances with, some of the big tech firms and just everywhere. And then also he noted that IT spending was the highest on record, except for the first quarter of 2000 when we were in the dot-com boom. And also just that, there's momentum in the economy, but there's also inflation, which is hovering around 3%, which is too high for the Fed's comfort level. And so he just mentioned that there's strong growth and productivity may be changing the neutral rate of interest rates. Could be because of AI, jury's out. And also mentioned was just that there are these structural changes happening in the economy, and those structural changes are both economic growth and productivity. The other thing that's happening with the labor market is that boomers are retiring and that we have less immigration. So we're not going to be able to count on that growth coming from the labor market, especially with the reduction in immigration. So that was noted. And I also noted was that in spite of the government shutdown, that the Fed still moved $5 to $6 trillion a day in monies, and that these flows happened regardless of the shutdown. And so the Fed was in business as usual mode while the government was shut down. So that is kind of like attesting to the fact that Fed independence is really important. And so seeing if there's anything else on that side. So there was also sort of a macro economy person that spoke, and her Coronado, it was kind of her global economic outlook. And she had a few thoughts on the tariffs. And she just noted that a lot of countries did not retaliate, but they found substitutes to the United States. And that the tariff rate in 2025 was like 18%, and that's way more than in a lot of other high tariff eras. That generally there's been a lot of uncertainty created in trade, and that it makes business leaders and firms, it's hard for them to commit without clarity. So that there's been these sand in the gears, if you will. Interestingly, emerging markets have been outperforming, and some of this could be because they're finding new trading partners, and also because they've got better trade policies than in the past from lessons learned. And then there's some really interesting numbers, and I'll show these in charts in a moment, about the AI boom. And people compare it to the dot-com boom, but she was just saying that's really not a good comparison. And funny enough, I was thinking, I don't really know if that's true or not true, if it should be compared to the dot-com boom, because it seems to be its very own thing, the AI boom. It's different. It's diffuse. It's diffusing throughout the economy, even though we see it really visibly in certain areas and in equities. And then the other thing she noted, because of a lot of the investment in AI related everything, infrastructure, software, all of it, that there's this narrowing of growth, and there's something called Dutch disease, where there's just a real just certain things are carrying the economy, and so that's at the expense of everything else. And I'll show you in that chart Basically, just, she was saying that the US is the epicenter of productivity growth, and we sort of see this in the numbers. Now, do we need all this AI capacity in the future? Maybe, maybe not, but who's going to pay for it? And what's the ROI? And so that's going to be kind of, I think, the story going forth. So, oh, and then Dean Foreman again just mentioned that, again, that oil and liquids may not be peaking before 2050. So that's a very, very different story than the one that was being told a couple of years back. Also noted was that regarding the AI boom, that there's a 3-year backlog on natural gas turbines getting those. And because of this, diesel, in fact, has been increasing diesel use. And you see this in like backup generators and everything. So that is not necessarily clean for the environment. And then the other thing was noted that in oil and gas, we have low inventories right now. And so, that could end up showing up in some tightness. So that might cure the low prices going forward. And then the other thing Foreman noted was that with LNG facilities, with a lot of these new facilities that are coming online, they sort of begat their own supply growth. When you build a facility, it starts, creating that supply growth. It'll, prompt demand and things like that. And also he noted in natural gas, and this is kind of interesting, that there's some cyclicality that seems to be leaving compared to how natural gas prices behaved in the past. And again, this could very much have to do with global gas trade. So, and also on a final note from Foreman, just that Texas really anchors a lot of U.S. energy leadership. So, as promised, this is one of the charts that was really interesting from the sort of macro global economic outlook session. And so this is the chart talking about, comparing the AI boom to the dot-com boom. And if you see here, this chart here is the price to earnings. 1995 to 2000, very high, almost 18 to 1. Now, in this AI era from 2022 to the present, it's 5, 4 or 5. And then this is interesting, investment to GDP. So it was like 1.1% in the dot-com era, and now it's less than, under 0.4%. But what's notable, this white dot, other investment, during the dot-com boom, there was other investment going on that was kind of in parallel to the IT spend. But right now, other investment is negligible compared to the IT spend, which kind of says a lot about that Dutch disease comment. I'm trying to see if I can go to the next one. Okay, so this is a little bit about some of the LNG demand. And this was from Enbridge. And they were just showing that there's this 14% growth, and I think that's up to 2040 or 50. And there's 23 BCFs of just LNG and Mexico exports. Baseload natural gas firepower, 11 BCFs. And then data centers, 7 BCF. So this natural gas demand is coming from a number of places. It's not just data centers, although they will be utilizing some. They're also going to be using renewables and just everything they can get their hands on. This was from Cheniere, and this is where I was saying that 6.9% growth is what's kind of at play now. And then it kind of slows down to LNG outlook. After 2030, it's more like 1%. But again, the build out, that wave is just kind of happening, and it's going to go on until 2032. So we're also, the other thing that was mentioned was, we're going from like 400 here tons to almost 700. So that's a huge number. And then I want to show, this is what I was mentioning about the 33 utilities that are going to be spending $1 trillion in CapEx by 2029. And so if you look at this, Duke is over 80, and we heard them say this in the earnings call. NextEra over 70 billion. Southern also the same. Southern XCL 40. AEP over 50, and I know they're doing some transmission in Texas. So moving along, this is just drilling into NextEra a little bit because I want to show you, how those numbers are translating. So NextEra is saying that they're actually a lot. I think they cited $40 billion for Florida Power and Light, and so the CapEx is happening now, and then the earnings driving is going to go on until after 2035. And then this is also just showing kind of what's happening now. And then this bar here is the expectation of when it drives earnings growth. So it's pretty well across the board. So now I just want to sort of merge some of these learnings with some work that I just did, and it was called the New Texas Energy Barons. It was also called the New Energy Barons in just the print version. And I was really looking at how, what were the demand growth drivers? And obviously the data center story is one of the big ones. And I sort of parsed this and through the eyes of 3 CEOs, one of which was the CEO of Vistra. And he had some really interesting comments and showed that, in fact, there's a lot of nuance to this. So, this something that was said at the Fed conference, that you can announce anything, but it doesn't mean that, it's going to happen, and that execution is really what matters now. How you execute on that announcement, how you see that through. And this is where we see some of this problem with the interconnection queues. And I'm going to try to talk about that a little bit. So basically, the grid expert from Enverus, she was just saying that right now, the timelines are still quite long. These interconnection queues just for new power generation. I'm not even talking about data center interconnection queues. This is what this is, but I'm just talking about power now. And she was just saying that, there is a mismatch between the supply that wants to get connected and the queues. So there's a mismatch going on. I heard this mismatch idea in many areas. And also that she was just saying it's kind of getting worse right now, and because of so much demand, which includes all the new generation that wants to, get on the grid, and data centers as well. So she was saying that, PJM it's not good. ERCOT's been a bit business as usual, takes a couple of years, and I'm not going to show the chart to all this. It's kind of been said. I think, generally speaking, it's like it can take 70 months, like SPP grid is 70 months. So there's just more demand than can be handled. So there's big bottlenecks in getting on the grid. And that's why you hear some of this behind the meter ideas with data centers. One thing that's happening is in Texas, and this is in my feature, the Barons, SB 6 was passed in Texas, which is trying to start getting some rationality to getting things hooked up and getting on the grid with large loads, which are data centers, industrial, manufacturing, crypto. And I have a chart that I'll show in a second about that. And this is just showing, that in Texas, there's 156 gigawatts of requests. But if you look at what's actually energized, that's a different story. And this energized is this green bar, which is way smaller. And then approved to energize is the red one, and it's not much larger. Planning studies approved, growing. Under review, a lot. Again, it doesn't necessarily mean all these projects make. And so something that was notable by the Jim Burke of Vistra, he just said, we were talking about peak demand. Texas grid is about 85 gigawatts during the summer. And Vistra is expecting us to grow to 105 to 110 gigawatts, not this full 150 gigawatt number to 2030. But he's assuming that large loads will curtail. And that was part of SB6. First of all, it tried to help with interconnection queues. It also asked large loads to shut off during, peak demand situations. And then there's and then also I think maybe they're supposed to start helping pay for some of these grid upgrades that happen as a result of them, building these large data centers. And so there's a lot of devil in the details, and ERCOT's really at the cutting edge of doing things right and getting things right. But, it's a work in progress. This is a whole new day. Virginia, apparently Dominion is, looking at a new rate class for data centers, because that's the other thing is, residential ratepayers should not be on the hook for a lot of this. And so you're starting to see that there's going to have to be new approaches to, getting on the grid and what large loads like this agree to in the future, that is going to be changing. So the Inverus expert was just saying that the tariff structures of utilities are old, and they're going to have to start spreading this out differently. And so that's one. And then the other thing that I can mention is that in LNG, just quickly, it's supposed to grow, like we're at 18 BCFs per day now of natural gas devoted to LNG. We're supposed to go to 40 pretty quickly over the next several years. So that's kind of a big change. And then this is, again, just showing, I was breaking out here the load between data centers and industrial load that's expected, that's projected. And so if you look here, green is the base case. We're here at 85, gigawatts. And then total grows, not a huge amount. In 24, data centers it wasn't that much. 27, that's 26. 27, you start seeing a good bit more. This is in gigawatts, a good bit more. And then it grows and it grows and it grows. And then the total grows. But look at the industrial, which is black. Pretty just stable growth. So again, the devil's in the details about what gets energized, what projects make, and all that. So that would be something that I would say that needs to be looked at in a discriminating way. Now I'm going to stop and wrap up. So going back to some of the interesting notes as well, I just want to read a little bit about this because I think I would be remiss to not mention it. So I asked a question about, which basins basically are going to be making the call, for both oil growth and natural gas growth. And one of the comments was that a lot of it's going to come from Texas and Oklahoma. They're just quite responsive in doing this, and that gas-directed drilling will be ramping up more when oil peaks. Some interesting notes about global demand is that the China market, a lot of it is residential and industrial, and therefore they import LNG. In India, all users, and there is absolutely the demand for infrastructure to unlock all the economic activity that is happening there and that will happen in the future. Also, a big market is Southeast Asia, Thailand, Bangladesh. They just have general top line growth, and they will be also importing US LNG. So this is why you see a lot of this growth, where you see it too, because basically they're importers. And then Enbridge mentioned that they see $50 billion of growth opportunities, period, to 2030, just in their system. And also noted that wasn't reflected on that chart because I think it got cut off, is that coal to gas switching, that's going to be 24 BCF per day. And that may be happening in both Appalachia and the Southeast, which was, what we saw in Florida represented by NextEra. That also just noting that, the average lifespan of energy infrastructure, the big infrastructure that we've had, it's 55 years. And so like there's a lot of nuclear facilities whose lifespans are getting expanded to even like up to 70 years. So there's this upgrade, expansion of existing nuclear fleets. And then one executive mentioned that they're kind of interested in SMRs, and I think SMRs kind of fit the bill because they're smaller and they can kind of be used in more targeted ways as opposed to building a big giant nuclear plant. You would just build that where it's absolutely needed. Also, this was from the executive session, some of the CEOs that spoke. And obviously, regarding data centers, hyperscalers, speed to market, of course, is where it's at. In the past, and we're probably talking the very recent past, like last year and maybe the first part of this year, the coordination between data center building and energy connection, putting the two together, the convergence, it had been more haphazard. But he said he's starting to see more coherency in the planning, which makes a lot of sense. So hyperscalers have had to learn energy and how energy works more, and it's dominated by permitting and licenses, and it moves slower, and physics and all this sort of stuff. So you're seeing this kind of realization of, how to do things, because you don't want your big data center just been run on a lot of little generators and using diesel. That's not a good long-term solution. And so in this quest for behind the meter, yeah, there will be some of that, but true all the way behind the meter, not a lot of that's going to happen necessarily, because at the end of the day, data centers are long-lived assets, say they're at least 20 years. And, the grid is still an asset in this case, and in its risk mitigation as well. So, so true behind the meter power islands, not happening right now. Haynesville will also be called on. There were some estimates about how that looked. And obviously the Western Haynesville is an emerging play. And I wrote about that called The Last Great Play. It was in the same edition as that New Energy Barons article. And basically that play, could have about, 25 TCF in it. So it and it's in East Texas, so it's ideally suited to Gulf Coast LNG, as well as close to a lot of the demand centers like Dallas and Houston. And that feature is also can be Googled. So basically, the bar is being raised by hyperscalers and for and about hyperscalers about the how to connect to grid, how to procure energy, and how to do it, with a bit longer term horizon. So that's starting to happen. And again, they mentioned that there's massive structural change in the demand curve to do with power generation and energy in general. And some of this is being driven by firms that are less rate sensitive, like hyperscalers and big tech, but that this is going to get sorted out by the market over time here. But basically the demand for energy is very much there, and it's in places that we just weren't thinking about anymore, because we're all focused on sort of the power demand in the United States, the AI driving power demand, and that's a piece of it, but there's a lot of nuance to that story. Thanks.